Folks, buyers just don't see the risk. I'll explain what I mean and then get into the latest home prices and insights for York Region for week ending October 29th, 2025. If you want to speak directly with me about your real estate situation, selling, buying, it's really simple to get a hold of me. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Recently, we put an offer on a property. We're representing the buyers. We put an offer on the property, and the seller wanted a quick closing date. In 30 days, they wanted to close. However, the seller was only going to move out 6 weeks later. So they wanted their money now, but 6 weeks later is when they were actually going to be moving out. And I explained to my clients the pitfalls of this situation, and we tried really hard to align the closing date to when the sellers were going to move out. We said, well, then we'll do our closing date, because my clients were flexible on closing date. We'll do our closing date in 6 weeks later. So closing date is the date that the sellers move out. Sellers weren't having it. For whatever reason, it was important that the sellers get their money now and stay another 6 weeks. So we didn't put that deal together. We moved on. This situation comes up from time to time. I want to talk about both sides, this buyer side and the seller side. Because when I'm working with the seller and this situation comes up and it strategically makes sense for the seller to do this, there's very little downside for the seller, lots of upside. Think about it. The seller gets their money today. They don't have to move out until a predetermined date in the future. They can continue to live in the home that they were living in. They could take their time moving, but they got all the proceeds for their sale. A seller's biggest negative is a buyer not closing. Well, in this situation, if the buyer doesn't close, the seller hasn't moved out. They're still living in their home. There's a ton of upside for the seller to do things this way. But when I'm representing a buyer and I look at the situation, there's very little upside for the buyer. There are some situations where the buyer may see this as advantageous. But when you really look at it, there's a lot of risk, a lot of downside. For example, if we told the buyer, hey, listen, you're going to buy this home and the sellers are going to stay there for a year. The buyer, most buyers today are end users. They want to move into the property. They can't do that. A year's just too long. Plus, they'll say, I don't want to be a landlord. And they see it right away that that seller's a tenant because they're going to be there for a year. And if we say, well, they're only going to stay for 6 months. 6 months? I don't want to be a landlord, they'll continue to say. But if we say they're going to be there for 2 weeks, 3 weeks, 6 weeks, it's looked at differently. The buyer doesn't necessarily see that seller as a tenant. They see it as they want their money today and they're going to be there a little bit longer. That's how they see it. They don't see it as a tenant. But that would be a mistake, because the seller, if they're staying there past closing date on whatever arrangement is made with the buyer, they are in fact a tenant and they fall under the rules and regulations of the landlord and tenant board. What if the seller doesn't move on the date they're supposed to move? How do you get them out? You have to apply to the landlord and tenant board. This is a major negative by allowing a seller to stay past the closing date. The offer's written under the pretense of vacant possession. You're not giving that. The seller is no longer the owner, but they're living in that home. They're a tenant in most cases. And so dealing with that, you've got to deal with that seller under the landlord and tenant board rules. What if the furnace breaks during that? Who's going to fix it? The seller who's now a tenant? Or you that you paid for the home, you haven't moved in yet? There's other aspects to this. When you applied for your mortgage and you got approved and they gave you the mortgage, whoever the lender was, and you closed, they gave you that mortgage under the pretense that you're the end user. Because you're asked that. Are you going to be living in the home? Are you an end user? You're going to be renting it? What are you doing? You're going to say, I'm the end user. But you're not. You're not the end user right now. You're a landlord. When you bought home insurance asked the same question. Are you going to be living in the home? And you said, yes. But you're not. Home insurance will be treated differently if you have a tenant. Your mortgage, you may not qualify for the same mortgage. The lender will treat you different if you're a landlord now. It's a whole different process, a whole different qualification process. Everything changes if the buyer does not take possession on closing. So lots of downside for the buyer, lots of upside for the seller. I'm not telling you don't do this. It may be advantageous for you to do this if you're a buyer, but really understand the risks involved. Buyers don't often see that, and that leads to a ton of problems later. If you think this video can help somebody you know, please pass it along. And if you get value from what we're talking about, subscribe. Now, let's get into the numbers. Here we go, folks. York region, I got tons of data for detached properties in Richmond Hill, Markham, and Vaughan. Average prices are a little bit closer than we normally see them. Well, Vaughan and Markham are normally pretty close together. Richmond Hill kind of is the one that's way up there. But let's get started. We're going to start off with Vaughan detached properties for week ending October 29. 30 detached properties sold. 4 of those sold at $2 million or more. Now 30, quite steady right now for the fall period. So we haven't seen the downturn that we would normally expect at some point headed towards the end of the year. So 30 were sold. Average sold price is $1,557,000. For the fall period, average sold price looks like it's been trending down. If we go back to the beginning of the year, it's very clear we're much lower now than we were at the beginning of the year. But if we just focus on a very recent trend, average prices for the fall looks like they're trending down. Compared to last year, 1,557 is 6% lower. The median price of 1,464 is 7% lower than the same week a year ago. The dotted line, that's a 4-week moving average. It's really simple when both the 4-week moving average for average price and median price are moving in the same direction. It's just really easy for me to say that. But in this case, for average price, the 4-week moving average, as I said earlier, has been trending down. The median price actually has been climbing a little bit, going the other way, trending up. 30 were sold. 4 of those, 13%, sold at list price or more. Listings. So active listings. In Vaughan, for week ending October 29, there are 623 available detached properties available for sale. 4.8% of those actually sold. And in comparison, for the city of Toronto, 5.6% of available properties actually sold. But looking at active listings a little further, the 623 that are available, 45% of those, so 277, are listed at $2 million or more. 45% of all listings of detached properties in Vaughan are listed at $2 million or more. Months of inventory sitting at 4.8 months of inventory, the top half of what we would say is a balanced market. Here's Richmond Hill. Sales are trending down in Richmond Hill. Only 11 detached properties sold. One sold at $2 million or more. So when it comes to only 11, even the previous weeks of 14 and 16, it kind of changes the numbers a bit, as the sample of the sales is not so much, and it skews the numbers a bit. So take these numbers with a grain of salt. Average sold price way down from the previous week at $1,613,000. 1613 is 21% lower than the same week a year ago. Median price of 1540 is 17% lower. 11 sold, two of those, 18%. Two is 18% sold at list price or more. There's 532 available detached properties for sale in Richmond Hill. 2.1% actually sold. That is one of the lowest percentages that we see of all areas. So 2.1% sold. In Vaughan, it's 4.8%. City of Toronto, 5.6%. Months of inventory climbed to 11.2 months of inventory. Here's Markham. 29 detached properties sold. 4 of those sold at $2 million or more. 29 is the busiest week we've had in a long time. We've got to go back to June to find another 29. So I'm not sure which way sales are going there, but they jumped up for the week that we're talking about now, week ending October 29. Average sold price is $1,605,000. 1605 is 2% lower than the same week a year ago. The median price of 1550 is 3% lower. 29 were sold, 38% of those, so 11 sold at list price or more. Active listings are trending down. There's 443 available detached properties in Markham for sale. 6.6% actually sold. 6.6% doesn't sound like a big number, but it's one of the more productive areas. It's outperforming Richmond Hill, which is one of the lowest areas at 2.1%. Vaughan is at 4.8%. The City of Toronto for detached properties is at 5.6%. So Markham is outperforming all those areas. And months of inventory dropped down to 3.5 months of inventory. Here's a quick summary. In most cases, you're going to experience more of a balanced type of market. But there are exceptions out there. Property, home type, neighborhood will all play into how competitive the market's going to be for you. Thanks for watching. Have an awesome day.